Hi guys, welcome to the video. In this quick video, I'm going to do a breakdown of the USD pairs, specifically EURUSD and GBPUSD, and how we analyze the dollar index and how it correlates to those pairs. So first of all, let's get started. You want to go on tradingview.com. Top left corner, if you trade in the USD pairs, you need to search for the DXY, which is US dollar index. Click on that, it'll load the page up. What we want to do is we want to break down the chart from the weekly time frame. So you want your support and resistance levels on the weekly time frame. So you click W here. Each candle represents a weekly candlestick, 1 week of price action. I can clearly see this is a support region here because price changes from bullish to bearish. I can clearly see this is a resistance. Sorry, this is support, that's resistance. This is support because it's changed from bearish to bullish. Once you've done that on the weekly time frame, you go into the daily time frame where each candlestick represents 1 day. You want to get your rectangle tool out from the left hand side. I can clearly see there's a resistance here. This is a level, this is an area where price action failed to break further. And it went down. It went from bullish to bearish, a green candle to a red candle, and price went down. So we're going to say this is a resistance region on the daily, and I like my daily levels in red. Then you want to do it on the same here. I can clearly see price has made a higher low. The candlestick has gone from bearish to bullish. So this is a resistance here. So I know, remember on your daily, this indicates your direction. So if price is here, it's going to go down to this level here. When price is here, we can expect it to go up to here. And again, same thing again. It'll always be between support and resistance. If it does break it, it'll act as resistance and it'll go down to this level here. That's how we can indicate where prices go next, and it can help us identify the direction of price action next. So that's how we use the daily levels. So we can see it's going down. So as you can see, it's bearish at the moment, which means prices can only go to this region here. Obviously, technical analysis works. It's not always 100% accurate. It's not always 100% guaranteed. But the way technical analysis works, you always look to the left. You look at the history. History always repeats itself. The levels are there for a reason, and they're always respected. Once you've done that on the daily time frame, you go to a H4 time frame, and you want to repeat the process again. So you want to get your rectangle tool out here, and you want to identify your support and resistance. So here I can see there is a resistance on the H4. You can have it any color you want. I'll prefer mine to be yellow. And you've got your support region here. So you can have your support here, but because there's a large wick here, I'd just put it there to end, so I know where price can potentially go to. So now I've got my H4 levels. I know where price can go on the H4 time frame. So at the moment, today, DXY is going down. We can expect DXY to go down. The dollar index is going down. So if you're trading the USD pairs, specifically EURUSD and GBPUSD, if the DXY is going down, which it is, we can expect the EURUSD to go up. So there would be buy trades on EURUSD and GBPUSD. So remember, if DXY is going down, that means the USD pairs are going up. So that's how we use the dollar index to help us identify which way price action is going on EURUSD and GBPUSD, and if it's a buy or sell trade. So today, DXY is going down. That means USD pairs are going up. That's what it means. So we're looking for a buy trade today. So now that I've done my analysis on DXY, we can go ahead and go to EURUSD and break the chart down. You go into the weekly time frame on EURUSD, and you want to repeat the process again. So remember, we always start with support and resistance on the weekly time frame. You want to go ahead and do that. I can clearly see there's a support region here, with price changed from bearish to bullish, and it's kind of made a high low. It is a sideways movement, but it's still changed direction. Here is another resistance where you can clearly see price failed to breach it, and it went back down. So there's your two levels. So you know price is going to move between these two levels. You then go into the daily time frame, get your rectangle tool out, I can clearly see there's a support region here on the daily. Now you want your resistance. Where's resistance? Here. So you know price can move between these two levels. Remember when I said DXY is going down? I know already on the daily there's a buy trade today. It's a green candle and it's going up. I can expect price to go to this region here. That's why indication, because the candle is green and also DXY is going down to this way. So that's how also helps with your price action analysis. Remember, you just want to increase your chances of winning a trade. There's no 100% winning trades here. Technical analysis probably works 70-80% of the time if you do it accurately. So you need confluences. So if you know DXY is going down, you know USD is going up, perfect. Now you go into the H4 time frame. You want to break down price further. Rectangle tool out. Get your support and resistance. So this would have been a support region here, but because price made a high low, this is the most recent high low, I'm going to make this a support region here on H4. Here's your resistance. It's quite a large wick. I could have it here to where the candlestick is, but I'd rather have it to the wick, just to give me an idea where price action failed to reach. You then go into the H1 time frame, which is your intraday time frame. So I trade 9 to 5, 8 to 4 London session, UK time. So these are the trades, these are the levels that I look for when price action is near to enter a trade. So if you get your Fibonacci tool out, top left corner, Fib retracement. This is a Monday, it's a bank holiday in the UK, 6th of May. You want to look at the previous day's price action, which is Friday. Because it's bullish, you want to get the Fib tool, click it from the wick. You can do it from the candle body. I like to do it from the wick. Fibonacci tool, click it, drag it all the way. You can have it to the candle body, but like I said, I like to do it to the wick. I dragged it from this region here, the higher low, all the way to the higher high. And this gives me my two support and resistance levels for the day. Here's your support. And here's your resistance. So if price is near this level here, I'm looking for buys. If price is near this level here, I'll look for a potential sell. But obviously we'd look at the DXY and see what their direction is. Obviously direction is bullish. So I could expect it to potentially break above it, retest it and go up to this level here. That's what you could think of how the EURUSD could play out based on the DXY, because we know the DXY is going down. Remember, DXY is going down, which indicates EURUSD is going up. So that is just an indication or a prediction of where price can go. As you can see here, price is pretty much in a consolidation movement now, where price is retraced to the 61% fib. So you could draw another level here, and you could actually look for a buy trade if you wanted to. Obviously, I only trade support and resistance levels, but I can clearly see price is retraced to the 61.8 fib. You can see there's bullish momentum. It has formed a higher low, and look at this massive candle, buyers into the market. And also, just to confirm, DXY is going down. You can clearly see that it is going down to this region here. So if I wanted to, I could actually enter a trade right now. Better entry would have been this one here at 7 o'clock in the morning, or this one here at 9 o'clock. But now it's still not bad. You've got a hammerhead which shows price, but buyers are pushing the price up, sellers are trying to push the price down. You could also draw this reference level. Price is definitely going up. So what I would do is, because I'm doing a live entry with the audience now, I'm going to show you how I actually take an entry on EURUSD now. So H1, you want to highlight the candle you're interested in. So this is the candle I'm interested in right now. If you get your long position tool out, I'd put it here for now, TP1. Obviously if it breaks, TP2 would be here, TP3 would be here, but I'd put it here for now, and then I can increase it if it looks to break it further. I'd put my stop loss just underneath here. So that's a 16 pip stop loss with a 33 pip win ratio. To reduce your stop loss, we then go into the M15 time frame, which is the entry time frame. So I've highlighted the candle that I'm interested in. Right now, the price is potentially bearish, it could retrace, so I'm actually going to wait for price to come close to this level here. And then my stop loss, instead of being 16 pips, I would reduce it here, under this high low. Because if price breaches this high low, it would then be bearish, it would go down on an M15 time frame. So that's how you protect your capital. So let's just say, I don't really like to go down to M5, I like to stick to M15. So let's say price is here, and I enter the trade. My stop loss would be just underneath here, to give it a bit of breathing space. So instead of a stop loss of 17 pips, you go into the M15 time frame, and as you can see here, my stop loss is 7 pips. So that's how you preserve your capital, and that's how you need to increase your winners and prevent your losses. How do you do that? By reducing your stop loss. Obviously I can't be stingy and give it a stop loss of 3 pips, because it is going to retrace, it'll just get me out of the trade. You need to give it a bit of breathing space. So 8 pip stop loss is fine. If I was trading H1, my stop loss would be here, just underneath these wicks. So this is where I would have my stop loss. And I'm just going to enter this trade now for you, just so you can understand how I'm actually doing it live. So EURUSD, on your MT4, select your pip volume, whether you trade a £1 a pip, £10 a pip, you know what I mean, that's up to you. You need to do that according to your initial capital and your starting balance. So I'm going to enter this trade. Obviously it's looking potentially to reverse, but that's fine, I'm just going to enter it anyway. I've only got a 8 pip stop loss, which is fine. So I'm just going to enter this trade now. And TP, perfect. So I'm in a buy trade. Remember when I said why we're buying EURUSD today? Dixie's going down, DXY is going down. Dixie's going down to this level here. EURUSD, it's going up to this level here. I'm pretty certain, I'm pretty confident. End of the day, it's about risk, taking a calculated risk. I'm risking 8 pips to win 33 pips. It's a risk to reward ratio of 4.19, 4.2. That's not bad. I'm happy with that. I'm comfortable losing 8 pips if I do lose, which is fine. I follow the process. I broke it down from the weekly to the daily, the H4, H1, and entered on M15. So you just got to repeat the process again. We're going to do exactly the same, but on GBPUSD. And if you just follow what I do now, GBPUSD weekly, you want to get your support and resistance levels. Should take you 2-3 minutes, guys, once you're comfortable marking the charts. Comes second nature to you. Support and resistance, as you can see in the daily, it's a green candle, which indicates buy trades. It is bullish. You then go into the H4 time frame and get your support and resistance levels once again. H1 is your intraday trading. Get your Fibonacci retracement tool out. You want to get from the higher high to the higher low, or in this case it's bullish from the higher low to the higher high. You got a higher low here, you got a higher low here, you've got one there. So let's do it from this one here. Higher low to the higher high. That'll give you intraday trading levels. As you can see, once price is in this region here, we're looking for buys. Once price is in this region here, we're looking for sells. So remember, we're buying on GBPUSD because DXY is going down. Remember, so if we were buying and price gets close to this level, which it did, you could have entered a trade here. Look at this. London session opened, could have entered here. That would have been a really good entry. It's on a level, bullish engulfing candle. It is confluencing with the DXY. It is going up. That would have been a really good entry to have. And if I did enter in GBPUSD this morning, this is how I would have done it. Stop loss would have been just underneath this level here, 22 pip stop loss. TP of 78 pips. To break it down further, M15 time frame, to remember to reduce your stop loss. If you enter in on that candle, could have put your stop loss here, and TP would still be where it is. So you're risking 14 pips to win 78 pips. That's a risk to reward ratio of 5.6 if you entered at 7 o'clock in the morning. Let's say, for example, I've missed that trade, which I have, and I entered just like I did on EURUSD, and I entered now. Price looks to be making a high low. So if you entered here, it is a transit trade. It's not good because if price does retrace, it could retrace all the way back to this level. But reduce my stop loss, I would probably have my stop loss around here. Just where price changes from bearish to bullish. You've got this change of formation, change of character, if you want to call it. You hear all these keywords, buzzwords that you hear online. That's how I would have took the trade now. But as you can see, it's only a risk to reward ratio 2.5, and I'd be risking 21 pips. So obviously, this is why I always recommend trading next to a level or on the level. You reduce your stop loss, you preserve your capital, and you increase your risk to reward ratio. So I hope you enjoyed that session, guys. That is how we analyze the USD pairs. Remember, you always start with the DXY. So remember, DXY, we started here, we could see DXY is going down, which indicates buy trades on GBPUSD and EURUSD. So I hope you enjoyed that session, guys. More to come. Like, share, and subscribe. Peace.